Hi everyone, I've got a fascinating interview for you today. I have got Dave Baxter, the funds editor at Investors Chronicle. Now, by my estimation, he should be the most knowledgeable person about funds anywhere in the UK. Now that I've built him up, let me ask him some probing questions on what, well, hopefully should be informative, educational, and as I always say, should be entertaining as well. So Dave, I've read all your columns from the past month, and there have been quite a few.
Yep.
Funds. What should I be getting excited about in the funds industry? Because, you know, a lot of our viewers, they'll want to diversify their holdings and they won't want to necessarily pick individual stocks. They'll want the safety that funds gives them. What's happening in the funds universe that they should be getting a bit excited about?
I mean, I guess one of the big trends that I'm sure you're discussing a lot is kind of AI and people wanting to get into that. What's interesting there is you might not want the concentration, the risk and the complications of directly holding something like NVIDIA. So a fund might give you just a more diversified way into that. So we analyze some of the funds that have big positions there. And they're really quite different beasts. So you have some names like Scottish Mortgage. That's one of the biggest investment trusts in the UK. They focus on kind of future trends, things like biotech, tech, e-commerce, and so on. They have a big NVIDIA position. The fund has been really hit hard in the last 18 months because of rising interest rates and so on. On top of that, you have some dedicated technology trusts. So Polar Capital Global Technology, Allianz Technology. They are specifically, targeting that trend, holding things like chip makers and all sorts of other kind of related companies. I think there's some notes of caution do need to be issued. So there are some funds that have these really, really punchy bets on things like NVIDIA. There's quite an unusual investment trust called Manchester and London that had something like a quarter of the portfolio in NVIDIA and then even slightly more in Microsoft. So,
right.
It's risen so high.
They call themselves a fund, but 50% of that money was in two companies.
Yeah, it's kind of a two-stock fund to an extent.
How big was it, by the way? Do you know off the top of your head how many millions they raised off the back of selling that?
I'm not sure. It's not the biggest fund.
No.
I mean, it had a difficult time. It got quite kind of beaten up in the growth sell-off that we saw in recent years.
Yeah.
But even this year alone, it's risen by around a fifth already.
Right.
We're 2.5 months into the year.
Yes.
But I think you then need to question what works for you as an investor.
Exactly.
Perhaps it's still a more diversified way to get into these names than simply holding NVIDIA or simply chucking loads of money into Microsoft. But you do, with funds, you always need to kind of dig under the bonnet and look at what else it's holding.
Well, I'm glad you said that because that's my concern with funds is that you can't just say, okay, I'll just give it to the fund manager. They're experts. They know what they're doing, which is what I liked about your articles because you've already mentioned the cautionary side, which is, I think, so important. And that's what the Investors Chronicle and your articles are good at picking up. When we talk about the cautionary side and you're digging deeper in these funds, what are some of the things that, as you already mentioned, concentration is one. What are some of the other things that make you sort of raise your eyebrow and alert people to say, look, you might have heard of this one, you might be thinking about this one, but here are some cautions?
So one slightly jargony term, but it's very useful, is style drift. So funds tend to have remits. So they might, for example, buy, so-called quality stocks, things with kind of economic moats, things with good levels of cash generation and so on. But styles can sort of, wax and wane. So you've had more kind of, in recent years, you've had more so-called value stocks, so more cyclical sectors, things like energy and so on doing well. Financials are looking interesting again. When these styles wax and wane, it can be very tempting for fund managers to think, my performance is struggling right now.
Yeah.
Maybe I'll just kind of take a little bit of exposure in, cyclicals or, I suppose tilting it, looking at last year, you think of things like the Magnificent Seven, you think of tech roaring ahead again. Perhaps a manager that doesn't normally focus on that might just take a bit of exposure in order to kind of limit their underperformance. But that's a problem for you as an investor because their fund should be one of the building blocks of your portfolio and they should do a certain job and then a different fund should do another job. Yeah. So you kind of want to monitor a fund's performance in a given time. So last year, for example, if it is a kind of growth focused fund, if it does focus on things like tech and those interesting trends, you should expect that fund to be performing really well.
Yeah.
Whereas if it's a fund that takes more of a value approach, for example, if it's performing really well, you need to ask why.
Yeah.
And equally, these funds should be performing badly at certain times when you expect them to.
That comment you made about style drift, I think that's, again, why I think it's so important for viewers and readers to be looking at something like an Investor's Chronicle, because style drift was a term which, from my memory, became popularized by the economist Eugene Fama, who went on to win the Nobel Prize in economics. You're not going to get that off social media. It's going to be off somebody like you looking into stuff and saying, well, actually, what we're seeing with this fund is don't just read what's on the label, but dig deeper.
Yeah.
What about some of the more popular themes? What are the dangers and pitfalls? People see the labels like crypto, blockchain we talked about earlier, AI, cyber, these great sounding labels, but as you say, one pitfall is style drift. What are your what the warnings you'd issue to viewers on looking at some of these labels?
Yeah, I mean, many of these funds are now, the thematic funds are ETFs. And what's really good about ETFs is they have to publish their full list of holdings. So you can go on the website, you can download or open their full list of how many holdings it is, 20, 150. And it's just useful to look at the actual composition of the portfolio and what's in there, because those funds have a couple of almost conflicting dilemmas. So one is they may want to go very purely into a theme, and that can involve taking big positions in stocks that aren't always very liquid. So you can end up with these very large exposures with funds having 10% or more in, stocks that aren't that big, and that can cause problems. On the other hand, some of these providers that build these funds will try and kind of create some liquidity, but they'll basically end up having quite a watered down exposure to the theme. So I remember a couple of years ago, there was a space fund that launched, and, it was a very kind of exciting theme. However, I think for liquidity purposes, they have things like Netflix in there.
Yeah.
So it's very difficult balancing act. Yeah. You want to look at what's actually in the funds and maybe do a bit of research on the companies, and is that really targeting the theme in the kind of direct way that
and presumably that's where you come in, because I was looking at your articles and you'll do the deep dive for them in these areas. Is that right?
Yeah, absolutely. It's about digging into the literature and looking at how funds perform and just what's really going on under the surface.
Yeah. I also liked, amongst all of the columnists in the Investors Chronicle, I love your headlines. I don't know if you write your headlines yourself, but I love your headlines because they really hook me in. You've got the best way to tap into rallying markets. Now, who would not want to read that? You had the factor funds keeping up with the US tech rally. Who wouldn't want to read that? Tell me, how are you picking your subject areas so that the audience ought to be reading it, even if they don't realize beforehand, actually, that's something I need to know. How do you pick, what to write about?
So it's looking at an interesting trend, something that's catching people's eye, and then considering something people haven't thought about in relation to that in the funds universe. So you mentioned the kind of tapping into rallying markets idea. That's focused on Europe and Japan. Both markets the UK investors have often not been that excited about, especially in a decade or so dominated by US tech. But those markets performed so well last year. Both really came into form after some quite mixed periods. But if you look at how to get exposure to those areas, then if you're using, say, a tracker fund, if you think I'm just going to get this Europe tracker or this Japan tracker, there are some massive differences between the different funds that you can use. For example, some European trackers will include Switzerland and some won't. And that means whether or not you get exposure to a stock like Novo Nordisk, which is, causing huge hype at the minute. So there are just all these small details that are really useful for investors to be aware of when they're thinking about funds.
And you presumably, I guess you keep your ear to the ground, both in terms of the research you're getting, but also in terms of reader questions. And in terms of reader questions, and that's, again, the great thing about having experts on one side and then access for viewers and readers on the other side, what's hitting your mailbox a lot at the moment that you think, you know what, over the next few weeks, months, I think I want to be writing about these, you've got them in the hopper, let's put it that way, that you'll be writing about.
So readers often have really good but very difficult questions and dilemmas. So one of them, and they're often actually quite, at least in the last couple of years, they've been quite macro focused because things have been so much about where interest rates are going, what's happening with inflation. And I suppose one that is still very relevant is people are kind of looking at what do they invest in as interest rates either peak or pause or even fall. And that kind of leads you into areas like, for example, bonds are interesting again for the first time in however many decades and attractive and could actually kind of serve their purpose as I suppose, a safe haven asset once again.
Well, so tell me, if I asked you, I put you on the spot and said over the next 12 months or so, get us right up into 2025, middle of 2025, regions. Let's start off with regions and fund exposure there. Which regions are exciting you? If we break that down from Europe, US, emerging markets, let's even say China as a standalone. Obviously, the US, Latin America. Are there regions that you're thinking, well, actually, this is overlooked, or it might not be overlooked, but this is where there should be more concentration in your fund portfolio?
It's a perennial thing, but the UK still looks...
For a minute there, I thought you were going to say that's a really good question.
It's an excellent question.
Well, thank you very much. That's number one. Sorry, please continue.
But yeah, I mean, we could have been having this discussion at any point in the last 5 years, but the UK still looks kind of very oversold, underloved, and in theory, you should see kind of a pickup in performance. I suppose what's interesting is what triggers that. I mean, you've seen even from things like Japan that a market can be in the doldrums for an incredibly long time. And then it finally starts.
Well, I hope we won't be in the doldrums for as long as Japan. It has been 30 years before it hit an all-time high again.
Yeah, 34 years.
Yeah, everyone forgot about it, and then all of a sudden they creep up on you.
Yeah.
I'm going to challenge you on the UK. I'm going to play devil's advocate. So the FTSE 100, in absolute terms, not including dividends, since 1999 is up about 7.8% at the time we're recording, give or take. 7.8%, not annually, in absolute terms. 25 years of waiting, but I think, it's like waiting for England men's team to win the World Cup in football. When are we going to get the kinds of rallies that we've seen? Should we be looking at the UK in our portfolio? Or should we say, look, SIPP and ISA, I can look elsewhere in the world. Forget it. I'll just go where the money is. After all, I'm going to spend it in Britain, so I'm still being patriotic. But what do you think? Should we just give up hope, or is there a little glimmer of hope somewhere?
I think there is some hope. I mean, you're seeing some kind of policy measures and I don't know, arguably maybe you'll hit a tipping point just because of where valuations are. I mean, it comes down to the kind of unglamorous diversification point. You should have some UK and equally, the US is such a dilemma for investors because, again, this is a conversation we could be having any point in the last 5-10 years, but US is looking kind of, some might argue, frothily values, and people might worry about the momentum that's been behind those stocks. But, anyone who's gone against that trade in many of the last few years has been, in trouble.
But well, now you've picked up on an interesting point there, momentum. And, we often talk with funds, we talk about value, we talk about growth. But as you and I know, there are actually momentum funds. We literally say momentum. Why is momentum the sort of ugly sibling of value and growth and income? Why shouldn't listeners and viewers think about, well, actually, wait a minute, let's just, grasp the nettle and go for momentum funds? Do you have anything against them necessarily?
No, not really. And I mean, in theory, momentum should be working really well. But I mean, we've looked at some of the kind of so-called factor funds that try and capture these factors in the US in the last year or so. And the most interesting finding there is, I mean, you've seen some almost predictable things happen. Value underperformed growth and quality did very well. But momentum was actually quite underwhelming. It had a very small return last year, in a year that was marked by such massive US outperformance. it's quite hard to identify what the problem is there.
Yeah.
One issue might be that these funds tend to kind of rebalance their holdings on a fairly slow basis. So they tend to do it only every 6 months.
Yeah.
And that can mean that if things are kind of moving quite quickly, then they're basically...
Which it would with momentum, presumably.
Yeah. So they could be sort of belatedly loading into some of these kind of runaway stocks from last year. But I think, again, there is a cautionary note that these factor funds, you need to understand how they work.
Yeah.
And they don't always quite do what you expect. But I suppose one interesting point, again, is with these funds and with thematic funds, you could always use them for inspiration rather than relying on them as a vehicle in themselves. Perhaps you could look at the holdings
and see
how they're constructed and
reverse engineer them and be your own sort of fund manager almost. I do like that idea, and I think with the sort of hand holding that an Investors Chronicle does to just double check the ideas and come up with new ideas like that, I think I can imagine viewers and readers thinking, well, actually, let's have a look at this. I didn't know you could do that. And so let's go back to regions again. Emerging markets. I mean, the old joke is they're forever emerging, never arriving. When, is it going to happen? Is it possible to even capture what we read about these stories out of, say, India or Vietnam or whatever? Is it even possible to capture that through a decent fund? Or are there too many handicaps, as you said, with the momentum ones, there's this handicap of rebalancing belatedly. Are they just impossible to capture that growth, or should we just reverse engineer it, as you say, see which ones you're covering and then look at the websites of those and work out what they hold and do it directly?
I think that can be quite a hard area in which to stock pick. And also you may not always find all of the stocks are kind of available to you as an investor via a platform. But there are actually plenty of good active funds in that space. I would say the broader kind of Asia and emerging market funds, as you mentioned, have had quite a disappointing time. The markets in general there have had quite a disappointing time. They haven't really emerged, as you say. I suppose one interesting area to consider is, and this definitely does come with risk, but single country funds have managed to capture some of those kind of big waves. So you've had some good India funds have done really well, have posted some huge returns. You also have some dedicated Vietnam investment trusts, and they've had some big ups and downs, but the ups have been very good. But to highlight my risk point, you have some dedicated China funds, and they've been struggling for the last few years just because that market has been so challenging. But that is a good way to get quite targeted exposure, but you do need to bear in mind how kind of risky a position you're taking, and therefore you need to kind of size that position accordingly. It just needs to be like a kind of small punchy play in your portfolio.
Well, this is what I like about your articles, because what they'll do is they'll highlight the opportunities, but very importantly, they'll also highlight the things to be careful of. As you said, there's a lot to be careful of with funds, because I think private investors often think, fund expert, fund manager, outsource. It's not that simple, which is where you come in. Single country, Brazil, Japan, India, as you mentioned. What do you think into 2025, and this is putting you on the spot, it's really unfair, which country do you think might be the one? And this is really unfair, but we will repeat this clip over and over again. If you're wrong or if you're right. No, we won't do it if you're wrong. It'll get buried in a vault somewhere with the rest of mine.
I mean, I suppose an interesting contrarian idea is China, because valuations are so low. There's still kind of a lot of interesting companies there. And in the fund space, some of the options there are investment trusts, and their shares can trade at big discounts to the stated value of what they hold. So if you're kind of an adventurous contrarian, then you can kind of take a small punt on that kind of thing. And also some of the broader funds that have done well in the past have been now tilting back to China, thinking that perhaps the regulatory challenges there, perhaps we've seen the worst of that and things could be getting better. But I think the crackdown of, I think it was 2021, reminded people, as one fund manager jokes, that China is an emerging market. And people almost forgot that and thought it was kind of, fine, solid, standalone region in which to invest, but it is going to throw up some surprises and cause some problems in your portfolio.
You mentioned emerging market, and by that, it's the volatility, obviously, that people are concerned about. I go back to 2022 and Meta fell 80%, and you think, America, emerging market characteristics. People want that exposure to tech because then afterwards it rose 250%. And of course, you've got NVIDIA, you've got a whole bunch of, I think in 2020, Crocs, even the ugly shoemakers, were up 250%. People look at that and they think, FOMO. They think, I missed it. When you're covering your topics, how mindful are you that there's a bunch of your readers who want to be informed about what's going on in the world, but there's a bunch who are reading it, as you and I know, because they're thinking, right, where am I going to make money? How mindful are you of that, and how do you address that readership who are buying the Investors Chronicle because they want ideas to make money?
So feeding the FOMO type thing?
Yeah, well, it might be the ones feeling FOMO. It might be ones who are just, look, I'm buying this, not just to be informed like a newspaper. I'm buying it because I want to make money. Is Dave Baxter going to be giving me ideas which might be able to help? I mean, it puts you in a difficult position because that's not your principal job to advise them on making money. How do you address the readership is the broader question. How do you make sure when you're writing, you've got, your readers want to read what you're writing? What's your thought process for all of that?
Yeah, I think, again, you look at kind of interesting trends.
It was another good question, wasn't it?
It was a
bit lengthy, but it was a good question. I thought I'd remind you.
Thank you. Yeah, good question.
Yeah. Edit that bit in. They'll know what to do behind the scenes.
Nothing but
right. Yeah.
It's an interesting one because, again, you are, as I mentioned, you're looking at kind of the interesting trends, whether it's AI, whether it's kind of markets that are performing well, whether it's things that look particularly beaten up, like, UK, small caps, that kind of thing. And then you need to present what the options are. But as we've discussed, you do need to, I suppose, kind of exercise some responsibility there and exercise some caution. And you need to kind of highlight areas that are risky and also kind of, what people need to consider when they're trying to execute these investment strategies. And that is the kind of the issue of funds, that there is so much detail and there's so many things that people can quite easily overlook. Yeah. And it's easy just to get drawn into something based on past performance or the name or that kind of thing.
Let me return the compliment. That's a really good point, actually, in all seriousness, because you're talking about responsible journalism. And when we think about where people get their information from nowadays, which is social media and somebody pops up on their screen, that responsible journalism, which would come from, obviously, Investors Chronicle. And, you've talked as much about warnings. It's not been, you should do this. I'll tell you, buy this fund now and this is where you'll make money. It almost seems to me as if there's a lot more to be worried about to navigate the markets, especially now that we're at all-time highs in the US. How do you see 12 months panning out, given the risks involved at the levels we're at now?
It's interesting because in theory, we should be in for a kind of easier time, which are, slightly perilous words, aren't they? But, if you think kind of interest rates are leveling off, perhaps the global economy improves and generally sentiment lifts. So there should be more kind of easy wins.
Yeah.
I suppose, again, maybe we kind of introduce some familiar risks again where there is that FOMO, there are these runaway stocks, and then people can end up kind of chasing things. You can get some more kind of frothy type trades. You can get things like thematics where it's easy to get drawn into something that briefly performs well and then gets into trouble. So again, it kind of comes down to things like your mantra of diversification.
Yeah.
Practices like rebalancing your portfolio. So for example, if something is absolutely skyrocketing in your portfolio, then this may skew the kind of allocations. You may have more in US tech, for example, than something else, and you just want to rebalance things back to where they were so that you're effectively sort of buying your losers.
Basically, don't stick your head in the sand.
Yeah.
Essentially, vigilance.
Yeah.
Which is, again,
what's going on.
Yeah. Well, which is, again, where the magazine comes in, because it's weekly and actually the newsletter's daily. So I feel that vigilance is incredibly important if you want to keep because it's not just about making money, it's about keeping the money. If you want to keep your money, speaking of money, one of your headlines, which caught my attention, I said, I love your headlines. It asks a question which I thought to myself, oh God, yeah, I should have asked that, and I need to know the answer to that, and I hadn't thought of it, which is obviously the mark of good journalism. I didn't use an ISA. How do I avoid a huge tax bill? Now, there'll be other people in that situation, but not just that. You've got other articles where basically you're asking those kinds of questions which people forget. What do people do which you can... So your articles help them with outside of funds, because you do talk about these other areas, as I say, with tax bills and so on. What are some of the things you think people are missing? If you had to speak to them and say, listen, guys, these are the bits you're missing. These are the errors. These are the mistakes. What is, in your experience, you found that you try and address through your columns and through Investors Chronicle?
Yeah, so that piece you mentioned is from a feature called the Portfolio Clinic, where people submit their clinic, and then it's almost like an agony aunt, but for your investments. An interesting common quandary, I suppose, is simply that people don't diversify properly, because these are DIY investors in the UK. They love stock picking, they love doing research, but then it becomes very, very easy to build up a long list of UK individual shareholdings. And what you're then doing is you're ignoring the US, you're ignoring Japan, and when you inevitably get sort of waxing and waning of different markets, you're not really protecting yourself. And I suppose one other theme that I mentioned earlier is bonds. A lot of people are being, suggestions are made that they should kind of make use of bonds now because they are in theory, they are useful diversifiers again. And many people just simply don't understand them because they are slightly complicated and they just haven't been interesting for so long.
Well, on that subject, just as we get ready to wrap up, if your readership, everybody from beginners to experts. So let's take something like bonds, and people will be watching this going, some will be going, yeah, I know everything about bonds. Others will be going, I don't know, and I need to ask, how do you do explainers? How do you make sure it's simple enough for that wide audience that when they're reading your articles, whether they're a beginner or experienced, they'll be able to hit the ground running?
So we have some output that is focused on kind of beginner investors, but then a lot of our output is focused on our core audience, which is kind of experienced stock pickers. So normally with them, there is kind of some assumed knowledge.
Fine.
We'd assume they kind of get markets and have a decent level of familiarity with shares and that kind of thing. But then beyond that, there are many things that you can explain. Bonds, there are many unknowns. Again, funds, there are many unknowns. And I suppose we're trying to sort of share those things that people won't necessarily be aware of.
And I mean, what I liked is on the website, of course, as Investor Chronicle looks, as everybody does, for newer audiences, younger audiences, broader audiences, as interest in investment increases thanks to social media, and that benefits magazines like this. That online, there's those teaching tools, because they're evergreen. I mean, what's a bond is evergreen. You don't need to keep updating that each week. And I guess that's one of the other advantages of some of the stuff that you've covered. Not a question, so you can't say what a brilliant question. It was more a statement to let the viewers and readers know where they can find the extra material. We have to wrap up, unfortunately. You and I could talk about funds all day long. We are that interesting. We really are. But it's important because it's about money and people's pensions and savings and futures and all the rest of it. So, Dave, I wanted to thank you very much. Keep the enticing headlines coming, they bait me in, they hook me in, but they deliver, which is the important thing as well. And thank you for spending time with me and answering questions for which I know our viewers and listeners will love to have the answers to.
Thank you.
Thank you very much. And remember, you can have a 12-week trial to the print and digital versions of the Investors Chronicle for only £12. And don't forget to sign up to your free, I did say free, Investors Chronicle daily newsletter to get your stock market news, analysis, highlights, all into your inbox every single morning. I'm going to say it again, free.